Hello, guys. If you're just joining, we're seeing people file into the waiting room, so we'll start in about 1 minute's time. So good morning or good evening or good afternoon to wherever you are. My name is Chris, and we have with us today, directly from Silicon Valley, Rick Rasmussen. Hello, Rick. Good to see you.
Hello, great to be here. Thank you. Good morning from here.
I'm really looking forward to our talk. I know you've been preparing, and I know we've been discussing, and our topic today is basically COVID-19 and its impact on Silicon Valley. And Rick, I'm really excited to what you will be sharing in terms of the realities on the ground, so to speak.
Yeah. So I'm born and raised from here. I'm actually in San Jose as we speak. And so we've been living the downfall, as your graphic so why it kindly shows here, as things are happening in real time. And I can't wait to share those experiences with you and your audience.
And I think a lot of people have been really curious because this lockdown is putting in our places, and a lot of people are looking towards sort of the innovation hotspots and saying, how are we innovating ourselves out of this? And what's actually the realities on the ground? So let me give you a quick intro. So this is our fifth webinar in the Strategy Tools speaker series. So we had Scott and Rita, Alex, Bill, Rick, and then next session on May 19th will be Simon Torrance from the UK. And we will be doing questions along the way and also towards the end. So if you have any questions, please feel free to type them in as we go, and then we'll pick them up either along the way or also towards the end. And we'll make sure that all questions get answered if time permits. So my name is Chris. I'm founder and CEO of Strategy Tools, and I've been working on early stage ecosystem development, growth companies, scale up companies, working with accelerators, advising accelerators both in the US, Europe, and Asia. And maybe Rick, you wanna tell the quick intro and the quick background for yourself, and also you can mention how we originally met.
Sure, of course. Yeah, Silicon Valley native, several lifetimes worth of experience. That's a nice phrase. So I have an engineering degree from Berkeley. I used that to go into marketing and product management at 3 different semiconductor companies back in the day, each one of which was a startup with 0 revenues. We brought each one of them profitable, took all 3 public, and eventually sold them for a collective $12 billion. Wow. So I was either VP of marketing or CEO at each one of those. Went through a stint of venture capital. I didn't care for it very much, and we can share why a little bit later. Still an angel investor. And what I currently do is teach entrepreneurship and innovation at UC Berkeley and Northeastern University. It's a great experience. And also I do a lot of work with ecosystems around the world. I was the Canadian representative working for the Canadian government in Silicon Valley. I'm not Canadian, but you developed a lot of programs and tricks that are still being used today. So I consult with about 20 countries around the world. And that's how Chris and I met. So I do a fair amount of work with Austria and the Austrian government that sends startups here to Silicon Valley. So I run off to Vienna once a year and choose a cadre of startups that we think could do well in this environment. Along that way, I met people at one of the universities, VH Wolfsburg, in Austria, where I teach once a year. I was searching for a simulation that we could use in the classroom environment there. They specialize in simulations. We don't teach that way here in the US, but I searched the world over, ran across Chris and the website, Engage Innovate, was really fascinated with Scale Up and some of the other simulations that they did. So we put out a call, brought Chris in, we co-taught for a 3-day program, and also in the evenings had a chance to compare notes and got to be fast friends. So we still compare notes, and He helps advise me and I vice versa. So it's been a great relationship. Thank you.
And I think we're both almost dying to get back on a plane and go back to Austria again.
Yeah.
But Rick,
Anywhere.
I thought I should share actually what we just called setting the scene, just to basically pick up on what you just said. So the last time that I was in Silicon Valley, where we met last time, was actually working with the scale up and working with one of the accelerator programs in the Valley. And this was pre-social distancing anything. And it's going to be really interesting as we're sort of gradually going back. We're going to be building out scale up in a digital environment for sure, but also seeing how soon we can get people back to this way of working that we're both familiar with. And the last time, last picture I just want to share with you in the introduction, the last time I was back in Silicon Valley, it was busy, it was crowded, it was high energy, high paced, a lot of stuff going on. We were in the Nordic Innovation House working. It was probably like 10 at night on a Friday, and still people were coming in talking about random fundraisers and stuff. So Rick, I'm going to turn off my screen. It is really a pleasure. It's really, really exciting to have you with us and get your insights and get your realities on the ground, so to speak.
Cool. I'm glad you're showing that picture. I have a little story around that in just a minute. Let me share screen here. Cool. All right. Well, thanks, Chris. So this is Silicon Valley, it turns out. So that's the San Jose airport right here. And I'm speaking from, if you can see my cursor, right about here is my house. So hello, greetings from Silicon Valley. So what I'm going to talk about today, and it's not all about the presentation. This is intended to be a dialogue discussion, informal. But I'm going to talk a little bit about the current state, prior state, right before all this stuff came down and what we were looking at for Silicon Valley for this year. And all is not like happiness and roses. So I just wanted to give, there's some cracks in the mortar and I wanted to give you a sense for what that looks like. But then boom, disruption, chaos, what we're going through now. And then we're in the midst of this stage right here, which is a transition from the chaos into starting to figure out how to cope, develop new rules, develop new ways of living, and businesses that are starting to emerge out of that. And on our way at some point to a post-COVID-19 world, whenever that occurs. So what's going on now? It's funny. So well, wind back the clock to January, or actually the time that we were in the Nordic Innovation House. And, there's been this whole dialogue over the last 3 to 5 years about unicorns, developing unicorns being any company that's not gone public that's worth over $1 billion. And initially it was cute. There was a few of them and they got more and bigger. And then it got to be an ego thing. And then money started pouring in from China and Russia and the Arab world. And honestly, we've got a lot of unicorns, hundreds of them literally, that are not worth the money. So I think what we were starting to see was a saturation of all these overvalued private companies. Some of that was being eliminated because some of those companies started to go public and see the light of the public markets in terms of financial due diligence. But I think it's been a problem. Problem too, because with the trade wars, with Russian sanctions, with the Arab oil economy, we were starting to see a lot less foreign money pouring in to Silicon Valley. So you're not seeing this excess of capital at the later stages. Now, early stage financing is still pretty healthy, but later on. Also, here, we're limited in terms of geography. The housing prices are high. It's difficult to get immigrants in here now just to do a lot of different reasons. And so we're starting to see a dearth of startup talent, a lack of startup talent. Google, Facebook, a lot of the larger companies are also sucking up the really strong talent, paying exorbitant salaries. And so we weren't necessarily seeing a lot of really strong startup activity. The startup activity is still there, but not as strong. And just the California dream was ending. The traffic is terrible. The housing prices are terrible. Its quality of life is not as good as it once was. It's difficult to go see the natural scenes. It's not as good. So we were on our way, I believe, for a recession. Well, then, all this stuff happens and here we go. So disruption and chaos. So I live in Santa Clara County, which is this area down here. This, by the way, is kind of a quick Bay Area view. Silicon Valley is traditionally here. I'll show you some maps in a little bit. Turns out we now know that we were the first place to have US COVID deaths. Started in February 6th at the hospital about a mile and a half, well, about 2 kilometers from where I live right now. So this is literally ground zero for COVID. We established the first US lockdown. That's the 6 Bay Area counties right here. And that started March 19th. So we're coming up on 2 months. And I, like you, Chris, am going just a little bit stir crazy. We're allowed to go to the grocery store and the hardware store, not us. So we are the longest US lockdown. And the health departments here are very conservative. That's a good thing, but the opening is very, very slow, unlike a lot of other places in the United States. So this is kind of what we look at every day. This is the back page of the San Jose Mercury News, the newspaper that shows up. I still read newspapers. If we're not reading newspapers, everybody's on, but here we are, and you can see these black areas. This is LA, this is us, heavily affected, and so on. So we're not as bad as some areas, we're not as bad as New York, but we do track on a daily basis how many people have died from the virus and how many new cases and so on, just like others. We are at the prediction is at the tail end of the peak, but who's to say? It's not necessarily started to fall yet. Yeah. So this is downtown San Francisco. This was last week. This is California Street. Arguably busiest. These are cable car tracks. No cable cars running, no people on the streets. This is the building where I teach right here. This is Northeastern University on the 20th floor. Nothing. It's literally this quiet. This is what life is like at the grocery store. This is me yesterday going to the grocery store, everybody in masks, everybody lining up, getting in one at a time. Grocery stores are limited in participation. When you get into the grocery store, this is the aisle for toilet paper. If you wish to actually have toilet paper, you can go up to customer service and they will give you one small pack of rolls because it's still being limited here. 2 months later, you get our toilet paper. Here's the hardware store. Here's what I do if I have to get a sink fixed or we're trying to do an outdoor project or anything. So that's about a 2-hour wait to try to get into the hardware store. This is Chris. This is downtown Palo Alto. Yeah. This was yesterday. This was yesterday noontime. This is lunch. So here is University Avenue, the main drag. Facebook was founded about 100 meters behind on the right-hand side. PayPal about 100 meters on the left, on the left-hand side, right behind us. This is Ramona, right in front. This is right behind us, also about 100 meters, is that Norwegian Innovation House we just talked about. This is lunchtime. So it is locked down. There's nothing going on. So everything's moved to Zoom. Everything's gone to virtual world. People are still working. If you have a professional job at some place, then people are still working, but 1 in 5 have filed for unemployment. Uber, this is yesterday, just holds a Zoom conference saying that they're going to announce layoffs for thousands of workers, up to 14% of their workforce. Airbnb last week laid off nearly 1,900 people. So in a lot of the consumer-facing services businesses, which is what these are, that's where it's cratering. A lot of the other things that are enterprise-facing, so on, not as much. All the communication and healthcare companies are still doing okay. We'll talk about that a little bit later. So Chris, what do you think about that scene in Palo Alto?
I think it's, there are two answers actually. The first answer is it's sad and potentially devastating. Uh, and at the same time, I'm actually glad to see it because I've seen, some news images from the US in the last couple of days. When it opens up again, it just goes boom and
Yeah,
everybody's out and about.
I
So,
know.
it's really strange, really strange.
So again, here we're being conservative. We are in lockdown officially through the end of May, and I think that'll be extended.
Yeah.
The only things that are open right now are hardware, grocery stores, gardening, places like that where you can be outside and distance. Masks are required everywhere. Yeah, so we're being there. Thought this was interesting. Google tells its staff to plan for a year of remote work. So so their offices may open in June or July, but distancing and masks and so on. This is Facebook in the same article down here. So Facebook, July 6th, will let some employees but they can work from home through the end of the year. And then also down here, Facebook said no meetings of greater than 50 people or more through June of next year. So we're already planning over a year in advance for this thing to be basically affecting the way we work.
Rick, I think this last piece is interesting right here, where Mark Zuckerberg says, June 2021.
Yeah.
Because that's something that we haven't seen in a lot of places. Typically, it is, how soon can we open and when can we get back to some sort of normal? But I'm actually glad that we're starting to see some specific, at least limitations, well into next year.
So I'm not an American. I'm a Californian. There's a big difference.
Big difference, of course.
And by the way, there's a secession talk coming up again. When are we going to split off? But the rest of the U.S., you listen to that news, and I just sort of shake my head. They're crazy. If you live in Georgia or Michigan or any of these other places, I think just, it's unfortunate. I think we will see a bounce, and it's going to delay our ability to get back to normal, just in the order of being short-term selfishness. And so, some very wise people are predicting that markets are falling off cliffs. And then that there's going to be a lot of transition overall, firms into bankruptcy, industries collapsing, new industries rising. So let's kind of talk about that a little bit. I like this graphic. I think it's very, very telling. I'm collecting graphics of this. Actually, we're living in a unique time in history right now too. So every once in a while, I just have to take a step back and get away from the day to day and just realize what's happening and its impact on the world. It's really, so we're moving from this sort of chaos, disruption, what's next, what's going to happen, into this phase where we're starting to cope a little bit, not through the bottom of a wine glass, but actually coping day to day. And then developing some new protocols and rules. It wouldn't be a crisis without Sequoia Capital coming out with some sort of a warning letter to their portfolio companies. So they did so in 2008. It was a very famous one that was written by them, warning about the impending crisis and what's happening there. Here's what they came up with on March 5th, which was the discussion of this black swan, this unusual 100-year sort of event. And they're telling everybody, watch your cash, watch what you're doing in terms of fundraising, do it differently and cautiously. Be mindful of your sales forecast changing dramatically, your marketing strategies, your headcount, your capital expenditures all have to change in this environment where it's going to be very difficult because you can't necessarily predict what your outcomes are going to be.
So if you pause here for a second, Rick, I think this the Sequoia letter is very interesting. So if you think back to March 5 and March 6 and March 7, how was this initially received in your sort of social circles and community when it first came out?
And everybody goes, "Yep, they're right. Here we go. Okay, let's take it let's take it even more seriously." So there's absolutely no pushback at all. There's nobody that doubts that this thing is real and is big and is going to be, change everything.
Yeah.
There's not, unlike Washington or other places that take this lightly, nobody that I've spoken with takes it lightly here.
Hmm.
So it's interesting. Now we're dealing with a lot of CEOs, either first or second time CEOs that haven't necessarily gone through this. Coronavirus forces tech startup founders to grow up fast.
Hmm.
So the drive to go big or go home, which was the mantra: go big or go home. Raise as much money as you can. Push your foot on the accelerator, and dominate your space. Go big or go home is now just to conserve cash.
Hmm.
So they're not used to it. I mean, I like this quote. This is the most insane thing I faced in my career. I started this company when I was 19. Never seen a recession. These people have never had to lay anybody off.
Yeah.
They've never had to watch cash. They've always been spend, which is what they've been told. And then story by story, we're seeing these things elevate. So if you read through the lines on a lot of these things that are happening in TechCrunch and Founders Institute and a lot of the other blogs, this is the sort of theme that you're saying. And now people are starting to realize how to use some of these tools in order to get going. Yeah. So cash management, cash needs to last longer. Pricing, you can't count on your pricing forecasts or your volume forecasts. Everything is dropping. SaaS renewals, the early sign is they're going to be down around 30%. SaaS is software as a service, or anything as a service, where you're on annual contracts. Those annual contracts are coming up, and we're seeing early signs about down 30%. People don't renew the way they used to. Used to be people always wanted to have 12 to 18 months worth of financing in the bank under their belt. Now it's 2 years. And if you can't raise around, then there's the ability possibly from angels, small VCs, which are still investing, to get a convertible note, which is basically something that converts into equity at the next round of maybe $1 million. But in terms of both valuations and VC activity, I'm not seeing at early stage a lot of drop off. So valuation, seed is seed. Seed is raising less than $1 million or $2 million. It's their first round. It's small, often a convertible note. Right now, those values are not falling. People are still raising money. Some friends have raised money recently. Series A down a little bit. The VCs are always negotiating. They guilt you out to think that there may not be a lot of demand, but there's still demand out there. People are getting term sheets. I heard of one deal just the other day. Somebody had 5 term sheets, so good deals are still being funded. But for larger Series B, Series C, it's not really happening yet. We're seeing that fall off. And so the advice basically is to not try to fundraise now. It's going to be tricky. And that fall, winter, or even spring next year are going to be better times as things get back to normal. So here we are, another graphic. So let's talk about what's happening after all this goes on. First off, there's always a lot of creativity. I just like this. This is the Startup Blink COVID innovation tracking map. And so if you go to startupblink.com, they'll have this, and you can see all the various companies that are being formed in New York and Germany, where it's come to the 2, where you saw a lot of activity and so on. So yeah, now you've got a new category of companies that are forming. We've got hackathons. Hackathons have died here 5 years ago. No one does hackathons until just now. And so there's starting to be some activity to try to get, a groundswell of things going on in COVID. Here's something I borrowed. The says, what's it going to look like? We are down here in this valley of disruption. So things are starting to collapse, and this will last through the summer for sure. And then how are things going? We could end up plateauing further down than we are, or further up. There's all these talks about V-shaped recovery. Think about V, steep down, steep up. U-shaped recovery, sort of farther down at the bottom. W-shaped recovery, which is a slow recovery up, and then down again as things start to collapse thanks to these premature reopenings and things like that. So we're going through the alphabet soup of reopening jargon right now. I like that. Thank you. You can quote me on that. There are obviously a lot of things in med tech, healthcare, diagnostics, treatment. By the way, Chris, I'll give you a copy of these slides, and you're welcome to post.
Now, Rick, let's have a look at this slide you just showed. I think this is really interesting, and I've been speaking with several of the European innovation clusters around digital health and health technology and artificial intelligence for the health space. So what are some of the things that you're seeing more in detail around this space? Because, it's not enough to have just the innovation. You have to have a market, you have to have a buyer of sorts, you have to get all the pieces in place, and that's difficult now. So what more are you seeing in this space? Because I think this is a really interesting slide.
I think, yeah. So I do think that there's startups and there's technologies being developed, but you're absolutely right. The U.S. healthcare market's a mess.
Yeah.
So it's largely driven by insurance, and insurance either in the public form, Medicare, Medicaid, things like that, Veterans Administration, hospitals, whatever. And then separately, the private market, which is, if you're working at a full-time job, you get healthcare. But then there's this whole big segment of the economy, like myself, I'm self-employed, so I have no insurance, so I have to pay out of pocket, which is a third of my income just for insurance. And so the markets are super unclear in terms of where this stuff would go. And the governments are not helping at all in this terms. So what I'm hopeful for, and this is certainly wishful thinking, is kind of an overhaul of the healthcare system in some way, shape, or form. This started with Obamacare and obviously was shut down during the Republican administration. So I suspect, and Bernie Sanders, which wanted to nationalize it. And so we'll see after the election what happens, but there's certainly, right now, there's an urgency to try to both develop the technologies which are here, and then secondarily to try to streamline the supply chains and the markets and everything else that's needed to get these things in the people's hands.
I think that's an important point. You said the healthcare market is a mess. We're seeing the same thing across Europe, also here in the Nordics, that you can have a lot of the innovation, but actually finding who is the buyer and who is the user, and how do you actually get a contract at the end, that's really the tricky part.
Yeah,
also,
that needs to get fixed. And I am generally pessimistic about that.
Yeah.
So we've been through this before. So let's do another graphic. I love these things. Let's go through the Wayback Machine. So if you recall, 2000-ish, when we had the dot-com recession, big drop in investments overall, down. 2009, down. So we're expecting to see the same thing. Early signs say it's not as bad, but we'll see. I think we'll know a lot more during the summer. IPOs, which were the lifeblood of the tech industry back in the 90s. It was easier to go public. Most companies went public with a market cap of 300 to 400 million. It was a natural thing. The barriers were relatively low. Recession hit, it stayed down for a while. Recession hit, laws changed, and it became much more difficult.
Okay. So
this pipeline, which is exits, which is the important fuel that feeds the VC industry, is probably going to collapse for a while. And so that's a bad sign. Mm-hmm. But the good thing to say is that out of each one of these recessions, things rise from the ashes. So here's our class of 2000 to 2006, which is a number of companies that emerged right from the early dot-com recession. Some started beforehand, but really took off afterwards. Mm-hmm. Then what we also saw was in the 90s, companies really started out of garages and coffee shops, and there was no infrastructure for innovation. There were no incubators, there were no accelerators, there were no angel groups to speak of, small, and so on. And so what we saw was right after that, 2004, 5, and 6, a number of things that started that are still in play today that are really driving a lot of the innovation that we see. Fast forward to the financial crisis of 2008. Out of that comes the shared economy, Uber, Lyft, Airbnb, WhatsApp, the shared economy, the delivery services, and so on. And this list goes on and on. It's a fairly long list. A lot of the sales and marketing tools, the building a funnel, marketing automation, all came out of this as well. And then we have our own crew, 500 startups, Alchemist, the Stanford Accelerator, StartX, and so on. It all came out of that sort of downturn. So what's that mean now? So again, just repeating, what we see here is this reinvention that happens. Here was Silicon Valley. Here's where I live right now. This was silicon. That's a semiconductor back there, by the way. This was silicon and the network and storage in computing mediums. Sun and Apple and all the other computers were basically done down here. This is classically known as Silicon Valley, by the way. This is about 75 kilometers between these two points. The 90s, we started to see enterprise software, security, workstations, things along those lines. And now the economy is much more diverse. So we've got a strong clean tech sector, which is most of the solar energy developments out of the US are done on East Bay. Tesla, the Tesla plant, which just opened yesterday. Elon Musk violating local regulations, sent his workers in, but that's okay. AI, blockchain, San Francisco was turned into a tech hub, which it wasn't. We have a life sciences hub and so on. So things have really changed and diversified. And it's done so over time, and it does so in waves. So with a recession comes a brand new wave. And so we've reinvented ourselves from defense electronics to integrated circuits, to the age of the personal computer, to the age of the internet, to the age of social media, network, mobile devices, lots of changes. And this is the population. So the population shrinks here when there's a recession, which is good. People move out. So I invoke Schumpeter, Joseph Schumpeter, who talks about creative destruction as a way. And you can see that Silicon Valley has reinvented itself over and over and over again. We're good at that. We're used to it. We've seen recessions. I personally embrace them. Traffic gets better. You can get into restaurants. The attitude is better. It's just healthier. We clean house. So in closing, here's some predictions as to what I see going on. First off, short-term stuff and longer-term stuff. So short-terms, restaurants, anything service businesses, anything where you gather publicly will downturn to at least 50%. Social distancing, 1/3 to 1/2 of restaurant capacity will be there. Nobody's going to ride public transit. Relatively few did, but the traffic is going to get even worse. 50% of startups will run out of cash and will die in the short term, and 20% general layoffs in tech and unemployment. So we've seen it before. We're expecting it. It's just the way it's going to be. Things we haven't seen before are two things. One is there's this increased nationalism, which this is not good. So this is anti-China, so a little bit of anti-India, a little bit of we're America first and so on. That's creeping into, unfortunately, kind of the US economy at large and starting to show up here a little bit with the anti-China sympathies. China and us have been really strong, reasonably good partners. There's been an adversarial relationship on both sides as well, especially regarding IP, but it's getting worse. What that portends remains to be seen. And a lot of immigrants, and immigration is the lifeblood of Silicon Valley, a lot of immigrants, I think, will go back home as soon as the travel restrictions ease. So you'll see a lot of people immigrate back into China and India, maybe Europe and so on, as the economy here will tank in the short term. Longer term, I have better prospects. I think certainly we talked about boost to bioscience for sure, as opposed to maybe healthcare delivery, which is going to be more problematic. Um, Genentech, Chiron, the inventor of the new miracle drug, who I'll think about in a minute, are all from here. So we have a strong bioscience thing. Internet-based workforce. Zoom went from 10 million meetings a day to 200 million meetings a day. And so the internet-based workforce is here to stay, and I think Silicon Valley will benefit. I think we can do a lot of work in fixing manufacturing supply chains. They're clearly broken right now in a number of ways, and this whole crisis has exposed them. That's an opportunity. There was a move towards digital transformation, taking older industries and moving them into the digital world. That's going to accelerate. And on the bad side, I think we'll see increased government oversight. Government is feeling a little stronger, and will start to oversee what's going on within the tech industry a little bit more, our private lives a little bit more. I don't necessarily think that's a good thing. So we've got all these different, all I did was throw up, not all good, not all bad, but these various things that are changing in our world. And does this make us stronger or not? Or does this give opportunities for China, for Europe, for LA, for New York, for other ecosystems around the world? And I throw that open for discussion for really the rest of our time here and whatever else you'd like to talk about. So,
Rick, I've been listening to a few of your talks, and this has really been excellent, really, really, really insightful. And moving from your local supermarket to some of these last looking into the glass bowl kind of thing, wonderful. I have a few questions first, and then we do have some chat and questions coming up.
Cool.
Question number one: what about home shoring manufacturing? Right on the back of this nationalism, on the back of broken supply chains. Do you think we're going to see a lot of companies moving manufacturing back home again?
Yeah, I do. There's, Trump was playing it up, make America great again, move things home. He's putting a little bit of political pressure. Nobody really took that seriously here. A lot of lip service in my view. I think now that people are starting to think seriously about what does all that mean, and yeah, I do see more, what we had given up, I think, from a manufacturing perspective, was a lot more of the sophisticated manufacturing. You hold up your phone, very difficult to build. I used to be able to crack open the back of a computer. You can't do that anymore. So it's, I think a lot of the very sophisticated manufacturing will end up moving back here.
Yeah. Second question, you showed Joseph Schumpeter on sort of reinvention in waves. You've worked with a lot of different countries and a lot of different ecosystems.
Yeah.
What are your views on other parts of the world having that ability to reinvent themselves on the back of COVID-19?
Hard to say. There are a lot of places in the world that do well at one or two things. And if the world basically changes around, I'll give you an example, Italy in fashion.
Yeah.
Okay, just off the top of my head. And so, or the German auto manufacturers, I know you talk about a lot about that. In fact, that's really featured with Volkswagen case study in your transformation class and so on. So when you're vertically oriented, you're susceptible to the vagaries of what happens in the world globally. We're fortunate enough to, number one, be a bit diversified. So we've got consumer-facing businesses which are going to cave in. You saw the layoff notices for Airbnb and Uber. We've got a lot of enterprise-facing businesses. We've got biotech and so on. So I think from a Silicon Valley perspective, we're diversified enough that we'll probably see a little bit of this and that. But overall, I think, we will be hit, and that 20% layoff number, I think I'll stick by, at least for the time being, in the tech industry. The question was about Europe and other places. To the extent that they're vertically oriented, I think case by case, you have to take a look at what their susceptibility is. And then if people get laid off from those industries, hopefully they have the skill set to either, work as in part of startups. Startups are cyclical. Yeah. So the labor force doesn't necessarily work no longer in an office building or factory. Now they're available to go ahead and start their own businesses for those that are able to do so. And the government support in Europe is a lot stronger than it is here for startups. So there may be grants and things that are available. So I think you'll see more startup activity. And then what verticals are addressed, I think, is going to be interesting to see. Does Germany end up, being something different than a strong automotive manufacturer? Does Italy is going to be something different than a fashion mogul? I don't know. It's an opportunity right now. It could be.
It could be. It's a golden opportunity, a challenging opportunity indeed. So just building on that, if you're gonna give one or two kind of pointed advices to governments in Europe, I know you're working with some. I'm working with some. I speak with government representatives quite often. What should they be looking at maybe differently this time than previous crises?
I think they're a lot more aware of what startups are and the power of entrepreneurship to go ahead and change economies. If you take a look at the last recession, startup, what's that? Oh, that's stupid. Why are we even talking to these people? And so now that they're a little bit more enlightened, I think there's opportunities. So maybe instead of putting people on unemployment or strengthening older industries, maybe even be more aggressive, double down on what could be the startup economies.
And Rick, that fits really well into some of the questions that we coming in here. So we'll take the first question from Enrico, and he's joining us from Belgium. Can the large traditional European companies use this as an opportunity to build innovation pools and actually attract some of those people potentially leaving the US? So shifting a lot of that talent from Silicon Valley startups to more of a corporate entrepreneur kind of environment. What could that look like? That's a tall order.
That's a great question. I'd answer it sort of two ways. Is this an opportunity for older industries of food products, as one example, to go ahead and open themselves up? We talked earlier about digital transformation, which is sort of a subset of the opportunities that they could do, and that is to modernize their own supply chains and tracking and safety procedures and all the things like that. And so, yeah, there's a lot of opportunity for them for sure. The second part of that question kind of was, where does that talent come from?
Yeah.
And yeah, it could come from other industries that are necessary, probably maybe on the decline. And so somebody that is doing the Uber, the Uber equivalent in Europe, or other industries that are collapsing, consumer facing, so on industries. Yeah, you could steal talent for sure. And I think they're looking for employment. The mobility factor in Europe is probably less than you'd find in the US. So you probably want to hire local, and language is a barrier sometimes, and so on. Other interesting thing too is English is pretty much the international language of entrepreneurship. And so to the extent that, people learn more English and are able to move around and a little bit more would be great. Coming from the US, hard to say. I do think that there might be people that have settled here, emigrated from Europe, that want to go back home. That talent for sure.
Yeah,
that's ripe. And you can advertise to those people and bring them over. But the US itself, even though we're mobile inside of the US, only about 40, I think this is right, only about 40% of US citizens have a passport.
Yeah.
So we don't tend to, you don't even travel for our own pleasure, much less a new job. Yeah. So sometimes it's difficult to recruit from here.
So speaking of travel, and Rick, I know you've been doing some work in Brazil. We have a couple of questions here coming from Brazil.
Yeah.
Any advice towards the Brazilian ecosystem, both on the investor side and the startup sides? And what would you say to key players in the Brazilian ecosystems today?
Brazil is a super interesting ecosystem. First off, there's this whole layer of government, and I say I'm going to be apolitical here, but not incompetence or corruption, things like that. It's been a little bit of a mess here. Entrepreneurship has flown below the radar for the most part, from what I've been able to see, and they've been able to operate freely in this space below the government overhang. And there's a lot of great entrepreneurs and a lot of great infrastructure that's starting to develop, some innovative accelerators and so on they're doing some good work. So from a Brazilian perspective, yeah, they're being hit really hard right now by COVID. I mean, this is going to be really tragic, I think. Yeah. But as they rise out of that, I think there's opportunities. They're very entrepreneurial people. As long as the government doesn't get in the way, I think there's some great things that could happen in Brazil.
And just building on that, and one of the follow-up questions that we're getting, any thoughts on more of the, we're getting a high and a low income sort of ecosystem, especially in Brazil. So any reflection on the lower income ecosystem? Maybe less education, less access to capital, definitely very hard hit from the COVID situation in Brazil.
So I think what you're asking is, so we have sort of a university educated, the technical workforce, the people that are, entering software and manufacturing, things like that.
Right.
But then in Brazil especially, there's a level of entrepreneurship that takes place for lesser educated people that are getting into food services industries or the less technical fields and so on. I usually, when I go there, because it's a trip, I end up dealing with the technology sector more than I deal with the sort of day-to-day sector. But certainly the population is very entrepreneurial. They're used to surviving in a place that's chaotic, hence the ability to start up. And so to the extent that there's some simple training, how to start a business, how to run your books, how to get some simple financing, maybe some government support by way of grants, although that's been lacking for the most part. I think that layer is ripe, yeah, and really could be a powerful force within Brazil. Yeah.
So you mentioned the effect of the oil prices, and of course here in Norway we're really seeing the impact of the volatility in oil prices. But something I noticed in your Bay Area map was that you now had the clean energy kind of ecosystem on the rise. So what are your thoughts on, if we're looking ahead, what could this oil price volatility mean in terms of the clean energy and sort of the innovation happening in the energy space?
Oh, I think it accelerates that whole trend. Yeah. Clearly, and Europe has been ahead of the US for quite some time in that world, but there's a number of companies that are sort of getting out of the fossil fuel domain and into the clean energy domain, and investments increasing, the economies of scale are increasing. What did I just see? I think Nevada or Southern California, just in the paper this morning, is going to put up the largest US solar plant that exists. It's like the equivalent of 250,000 homes. It's going to be powered. So we're seeing a lot of acceptance, whereas a decade ago it was, the clean energy sector was seen as being flaky and not necessarily, just a sideline. But I think now it's become mainstream, and this will only accelerate the trend.
Yeah. I want to go back. You said something really interesting when you look at that, at sort of previous experiences, Rick, where you had sort of the first age of innovation, and then you had the second age of innovation. And in those ages, we sort of had the professionalism of the infrastructure and the ecosystem builders. What do you think are some of the elements that we can expect to see in this new age of innovation at the ecosystem level, both from a financial point of view, accelerator programs, more digital. I mean, we don't have a lot of digital accelerators, for example, today. So what do you expect to see moving forward in terms of that age of innovation?
Yeah, love the question. So each one of these times, I think what I talk about is we innovate on how to innovate.
Yeah.
So we're trying to come up with brand new business models about how to accelerate the ability to put a startup into the marketplace, to try to reduce the failure rates that they have, to try to increase overall value as quickly as possible. And so in the early 2000s, I mean, there was this whole idea of incubators and accelerators and things just starting. People were trying all kinds of different business models, and some succeeded and some failed. Big, high fallout. Again, here, because we don't have strong government support, you have to have a for-profit model. So any kind of group that's trying to help startups has to make money at it. So you get places like Y Combinator and 500 Startups that are basically a venture capital firm that focuses on super early stage and has turned that into a factory on doing it in mass. You get things like WeWork and so on that are co-working spaces that are trying to provide physical space and maybe a little bit of training or social networking and so on for startups. That's a business model, co-working. And then you get a lot of people right now that are doing corporate innovation as a business model.
Yeah.
So plug and play has sort of devolved into being a matchmaker between startups and corporations and getting paid handsomely by corporations to do that. So that's where we are now. That's what started, and that's what's it's overall become, is kind of those three primary business models for these early stage accelerators, all without government support, all of which have to be for-profit model. I think that there's going to be a lot more emphasis on, well, I come at this as an educator, on education. So what I'm seeing now is that each of the accelerators are starting to put together startup universities, startup schools, teach their companies how to do things like basic finance, supply chains, managing your vendors, negotiating, hiring staff, all these critical skills, some of which are soft skills for early stage entrepreneurs. Yeah. And so I actually think you're in a perfect place for this. I actually see a lot of activity going on there in existing accelerators. In terms of accelerator development, I'm starting to see a lot of specialization.
Yep.
So it started, but now they're a bit more professional. So blockchain accelerators, AI accelerators, specific ones for SaaS, software. Alchemist is the most famous B2B accelerator. I'm on faculty there, and so on. So those seem to be where you focus, and you have a whole cadre of mentors who have that same vertical expertise, that they're able to help those companies in robotics or AI or something along those lines, and so increasing chances for success. So those types of specialized accelerators are interesting because they have a strong acceptance criteria because they know their space really well. Yeah. And then once a company is inside of the walls, then they're properly trained and mentored and so on, and their chances for success are higher.
Just want to pick up on something you mentioned in terms of the corporate side, and we have a question here coming in from the UK from one of our partners. So, in light of everything, what is your view on the corporate venture side, so corporate venture capital or CVC? How are they getting through this? Will companies keep funding the CVC initiatives? Will they close down? What will corporate venture capital look like post-COVID?
Yeah. So for the last 5+ years, corporate venture capital has been the flavor of the month. Flavor of the month for 5 years. So sorry to twist my analogies, but a lot of companies were doing so, setting up corporate venture capital firms without necessarily all the spade work that you need to do beforehand. What is your strategy? What do you want to be when you grow up? What sort of resources do you want to put into place? What sort of startups do you want to interact with? So without all that, we saw extremely high failure rate. And I'd say over half of the corporate venture capital groups that have been set up have already closed their doors. And I think that's going to increase. I think we'll see a lot of vetting out of that. But when people see that and see that it's failed, some companies are taking a step back and resetting the metrics, doing proper strategic planning, identifying the things that need to get done. I see your book back there about the transformational company. So that's really strong training on exactly the steps that one would need to do. When you're properly set up and you have a good strategy, you know what you can do and how you want to do things with startups, how you want to interact with them and take advantage of their capability, then enter the corporate venture capital world. Now, those that have done that or learned through hard knocks and sort of stumbled upon the right way to do it are actually doing all right. And corporate venture capital is sort of a funny axiom because it's got components of trying to be successful from an investment standpoint. You know, like a venture capitalist, I put $1 in, I want $10 out. That's not necessarily the proper thing to do for corporate venture capital, which is I want to benefit the company strategically and over time to increase their overall value, it's particularly in the markets and so on. So also, in addition to just simply setting up a corporate venture capital group with a charter, but also set what its goals and metrics for success really are.
Yeah, no, it's a great point, and I mean we've seen a big rise in the knowledge and the expertise within corporate venture capital across Europe, but I think and I fear personally that a lot of these corporate venture vehicles will get shut down now. It's sort of a cost cutting, pulling back mechanism, but remains to be seen. Rick, we have about 2 minutes left. Always a pleasure, a really interesting conversation. What do you think the chances are that we're going to get on that plane and meet up for that beer in Austria in October?
It's early October. Yeah, I know. I'll get on a plane. I might be one of 17 passengers, but I'll do it. Yeah. Otherwise, I'm going to check out and sort of see what we can do. Cruise ships are probably a bad thing to do between here and there. I don't know.
Probably.
But I guess for October, 50-50. Yeah, we can. I mean, we'll wait and see. But I think you've given us a really good reflection, lots of insights. And, you know, we are entering, and as are you, a new part of this pandemic. Yeah.
Don't
every day.
Don't go to the supermarket too often. You know, use that Amazon delivery service for a reason. It's there. Use it, even if Jeff wins.
But thank you. Yeah, there's more traffic on more Amazon trucks on my street than there are cars.
And maybe that's a good thing. Rick, I want to thank you really for making the preparation, making the time. It's always a pleasure, and this is going to go on our various video channels and gets distributed out. So a lot of people are going to be seeing this in the coming weeks, and you've given us lots to think about. So thank you very much.
Great. Thanks, Chris. You're doing a great service. I love the company. I love your products, and I look forward to teaching with you again very soon.
Likewise. And everybody tuning in, stay safe, stay healthy. You can either wash your hands or just stay at home and work remotely. All the best, and thank you for joining. Bye-bye.